SP Angel, Morning View, Friday 1-2-10-18. Commodity wrap caught up in trade war sentiment. Click for PDF. MIFID 2 exempt information. See disclaimer below. Anglo-Asian Mining asterisk LON, AAZ, buy, target 84p, earnings update. Click for PDF. Cora Gold asterisk LON, Quora, 1 to 2 miles exploration target identified at Sanyankoro Cradle Arc asterisk LON, CRA, license extensions granted at Dekadu and Makala Galileo Resources LON, GLR, drilling results from Stars Inc. Orosur Mining, LON, OMI, Q1 results in Newmont investment in Anza Gold Project in Colombia. Premier African Minerals, LON, Prem, Zimbabwe to decide on restructuring of raw tungsten mine back in Ora Lithium, LON, BCN. Final audited accounts for year ended the 30th of June 2018. Telga Resources asterisk ASX TLG Swedish Cobalt Project update. London Mining Conference grows as number of specialist investors rises. 121 Mining Investment Conference with SP Angel 20 to 21 November. The number of investors looking at mining companies in London is rising as seen in growing interest in the 121 Mining Investment Conference to be held in November. Over 360 professional and other investors are registered to see 115 mining companies. See https://www.where121.com/121 mining investment London China. Weak Chinese car sales reflect slowing consumer demand amid falling economic growth rates as well as the knock-on effects of the trade war. Car sales plunged 11.6% YOY in September, making for the biggest drop in almost 7 years and marking the third consecutive decline. The decline comes on the back of sluggish economy, deleveraging and a tough pollution crackdown, according to the China Association of Automobile Manufacturers. The news comes on the heels of the PBOC comments that the central bank still has plenty of tools that it can use to soften effects of a trade war. I think the downside risks from trade tensions are significant. We still have plenty of monetary instruments in terms of interest rate policy. In terms of required reserve ration, we have plenty of room for adjustment, in case we need it, PBOC Governor Ye Gang said. The central bank cut reserve requirement ratio last week, which was considered as a move to prop up economic growth. EU offers billions of funding for electric battery plant. The EU plans to offer billions of euros of co-funding to companies willing to construct giant battery factories, providing state aid for electric battery research. In Brussels, there are rising concerns the automotive industry, which employs 13 million people, could be left behind in the race to build mass-market electric vehicles due to their reliance on Asian imports. Chief Executive of Renault Nissan Mitsubishi, Carlos Ghosn, notes the industry cannot continue to prosper unless it builds its own capacity. Energy Vice President at the European Commission, Maros Sefcovic, added, "We know very clearly that the future is electric and we simply have to catch up with this battery technology. You cannot develop new models or high-quality cars if you do not master the skills, the innovation, and research linked with batteries." Roughly 80% of the world's existing and planned battery production capacity is in Asia, according to Bloomberg data. China alone has 69%, with the US at 15% and the EU at under 4%. Individual EU countries will be allowed to fund 100% of research, as long as they involve some cross-border projects. The EU's Horizon 2020 Research Fund has set aside €200 million for battery projects. €800 million is available to finance building demonstration facilities. Regions looking to promote the industry can apply for the €22 billion regional funds available. And the European Fund for Strategic Investment is available from the European Investment Bank to co-fund the billions of euros needed to build an EU equivalent of Tesla's Gigafactory in the Nevada desert. As many as 260 companies across the supply chain and 4 groups have aspirations to build a gigafactory. Taking advantage of the support, Northvolt borrowed €52.5 million from IMF to build a €100 million demonstration line and research facility, expected to open in 2019, with ambitions to build Europe's largest factory 32 gigawatt-hours annual production, by 2023. Research fellow at the Bruegel think tank suggests the EU carmakers have refused to see the change occurring in electric vehicles for a long time and are only now starting to go in this direction. However, catch-up is still possible due to the EU industry's innovation capabilities and skills. To address the scarcity of raw materials, the EU plans to recover some from recycling old electronics and has also begun mapping European mineral deposits. The bloc has cobalt, lithium, graphite and nickel deposits in France, Finland, Portugal, Spain and the Czech Republic, said Mr. Šefčovič. High-capacity, thin lithium-ion battery. A team of researchers from Shinshu University in Nagano, Japan is now closer to a thin, high-capacity lithium-ion battery that could open the gates to better energy storage systems for electric vehicles. The research team was led by Professor Katsuya Tsushima, director of the Center for Energy and Environmental Science at Shinshu University in Japan. Zetsu may have turned the tide on surface modifiers through the use of a self-assembled monolayer to attempt to tackle gradual storage capacity losses. Copper flow, liquid metal in a crystal. New research reveals how copper ions can flow like liquid through certain crystalline materials, according to scientists in the USA. Researchers from Duke University, Oak Ridge National Laboratory and Argonne National Laboratory have used neutrons and X-rays to probe a superionic crystal containing copper, chromium and selenium. The study reveals that the copper ions inside the material can adopt a liquid-like character. Ultimately, the insights that emerge could be used to make rechargeable batteries safer and more efficient than the current class based on lithium ions. Oil price rise accelerated as killing of Saudi dissident in Turkey highlights potential to weaponize the oil price. Higher oil prices and the potential for Saudi Arabia to cut oil exports is likely to have a naturally and surprisingly negative impact on the global economy and U.S. corporate earnings. The impact is likely to be amplified most non-U.S. currencies unless the U.S. dollar corrects lower. Inflation is likely to rise, prompting the traditional response of higher interest rates from many central banks as they also move to support local currencies. Miners are more efficient in their energy production than they used to be but are still big consumers of fuel oil and oil-based reagents. We forecast oil prices to rise to $120 per barrel in 2021, coincident with a 3-year investment cycle as oil. Dow Jones Industrials 1.15% at 25,340. Nikkei 225 to 1.87% at 22,271. HK Hang Seng minus 1.33% at 25,457. Shanghai Composite minus 1.49% at 2,568. FTSE 350 Mining minus 0.26% at 16,861. AIM Basic Resources 1.27% at 2,113. Economics. Germany, ruling Christian Social Union recorded a sharp drop in supporters in the Bavarian state parliamentary elections on Sunday. The CSU, the Bavarian sister party to Merkel's conservative Christian Democrat Union (CDU), lost its majority in the regional parliament, having secured 37% of the vote, more than 10 pp down from previous result. Greens and the far-right Alternative for Germany recorded gains, having secured 17.5% and 10.2% of the vote. The shift in sentiment towards the CSU, which has dominated politics in the state since the end of World War II and ruled for all but 3 years for nearly 7 decades, comes on the back of factional disputes and delays in forming a grand coalition in the Bundestag over asylum policy earlier in the summer. UK, the pound is trading lower against the US dollar this morning as Britain rejected offer the EU terms, raising chances of a no-deal Brexit. Dominic Raab is reported to have had a brief meeting with Michel Barnier over the weekend, during which UK representative said PM will not be signing the current terms at a European Council meeting this Wednesday. A joint Brexit Department and Number 10 statement said that despite real progress in a number of key areas, unresolved issues remained following talks between Mr. Raab and Mr. Barnier. Saudi Arabia, the stock market recouped some of its losses on Monday morning as the government faces accusations of extrajudicial killing of a prominent journalist in the Saudi consulate in Istanbul earlier this month. Turkish officials believe the journalist, which is a U.S. resident, was killed inside the consulate. The U.S. president warned the kingdom would face severe punishment if the government is proven to have had killed Jamal Khashoggi. Saudis denied all allegations and said, the kingdom affirms its total rejection of any threats and attempts to undermine it, whether by threatening to impose economic sanctions, using political pressures or repeating false accusations. Currencies: $1.1573 per euro versus $1.1601 euro last week. Yen $111.83 versus $112.36, SAR $14.443 versus $14.460, $1.312 per GBP versus $1.325 per GBP, 0.713 AUD versus 0.713 AUD, 6.928 Chinese yuan per dollar versus 6.911 $. Commodity news: precious metals, gold $1,228 per ounce versus $1,219 per ounce last week. U.S. develops new gold-silver alloy for military use. Gold ETF 67.6 Ms versus $67.40 Ms last week. Platinum $844 per ounce versus $841 per ounce last week. Palladium $1,075 per ounce versus $1,090 per ounce last week. Silver $14.69 per ounce versus $14.58 per ounce last week. Base metals broadly retreated following a boost from strong Chinese import data on Friday, following equities after weekend warnings on global economic fragility from the IMF's annual gathering and President Donald Trump hinting at more trade tariffs against China. International Monetary Fund Managing Director Christine Lagarde advised investors and policymakers to be ready for more market volatility amid further financial tightening and choppy waters in the global economy stemming from trade tensions. The fund's advice to central bankers and finance chiefs is to continue building monetary and fiscal buffers for the risks ahead. President Trump raised the prospect of another round of tariffs on China's exports, telling CBS, "I want them to negotiate a fair deal with us. I want them to open their markets like our markets are open." Zinc, the worst-performing base metal year-to-date, posted the biggest decline as copper and aluminum also tumbled. Metals have traded sideways in recent weeks, with a gain of less than 1% this month, and are headed for the first annual loss in 3 years. Copper $6,279 per T versus $6,307 per T last week. Aluminium $2,034 per T versus $2,037 per T last week. Nickel $12,670 per T versus $12,855 per T last week. Zinc $2,644 per T versus $2,665 per T last week. Lead $2,050 per T versus $2,014 per T last week. In U.S. dollar, $19,090 T versus $19,170 per T last week. Energy: oil $81.20 per barrel versus $81.20 per barrel last week. The world hit a daily oil and liquids record. The world is pumping out more oil and other petroleum liquids than ever before. Global supply rose to 100.3 meters BPD in the third quarter, the International Energy Agency said Friday in its monthly oil market report. Output was 2.3 meters barrels above the same period last year and 1.3 meters BPD higher than the second quarter. Oil prices climb amid Saudi tensions. Crude oil futures rose on Monday as geopolitical tensions over the disappearance of a prominent Saudi journalist stoked worries about supply, although concerns about the long-term outlook for demand dragged down prices. Crude markets were also supported in the wake of data that showed South Korea did not import any oil from Iran in September for the first time in 6 years, before U.S. sanctions against the Middle Eastern country take effect in November. Brent crude rises $1.01, or 1.26%, to $81.44 per barrel, on track for its biggest daily gain since October. 9 U.S. crude futures rose 80 cents per barrel, or 1.12%, to $72.14 per barrel, extending gains they racked up on Friday after hefty losses on Wednesday and Thursday. Natural gas $3.197 per MMBTU versus $3.253 per MMBTU last week. China on pace to become top natural gas importer in 2018. China is expected to become the world's biggest importer of natural gas for the first time in 2018, overtaking longtime leaders Japan and South Korea. Spot prices for liquefied natural gas in Asia doubled between July and December of last year to $11.20 per meter British thermal units from $5.45. China imported 57.18 meters T of gas from January to August, compared with Japan's 56.45 meters T. Uranium $27.50 per pound versus $27.50 per pound last week. National Atomic Company Kazatomprom, the world's largest producer of natural uranium, is considering IPO and plans to publish a registration document of Monday. The company's sole shareholder, the sovereign wealth fund Samrik Kazina, is to offer securities. The privatization of Kazatom aims to boost the nation's economy and support a leading producer with approximately 20% global production. The deposit hosts the largest uranium reserves, with production achieved from a low-cost, highly scalable operation. In 2017, the company had consolidated revenue of 336.5 billion Kazakhstani tenges $905 million and profit of 139.2 billion Kazakhstani tenges $375 million. Bulk iron ore 62% face spot CFR Tianjin $69.90 per T versus $69.60 per T. Chinese steel rebar 25 mm $685.40 per T versus $683.40 per T. Thermal coal first year forward Safara $95.50 per T versus $94.70 per T. Premium hard coking coal Ausfob $191.50 per T versus $191.90 per T. Other cobalt LME 3 meters $61,750 per T versus $61,750 per T. China NdPr rare earth oxide $46,191 per T versus $46,303 per T. China lithium carbonate 99% $9,816 per T versus $9,839 per T. Tungsten AP European $275 minus 290 MTU versus $275 minus 290 MTU. Company news Anglo Asian Mining *LON AAZ 70p MKT cap £80 million earnings update by 84p. Click for PDF. We have issued our updated earnings to account for latest quarterly operations results and the 25% of FCF dividend policy. Click on the link above for a full set of earnings estimates. DEC year-end 2014, 2015, 2016, 2017, 2018, 2019, 2020. Gold price US dollar per ounce $1,267, $1,161, $1,253, $1,261, $1,275, $1,300, $1,350. Copper price dollar T 6,828, 5,505, 4,872, 6,196, 6,714, 7,000, 7,500. Gold production cost 60.372.0, 65.4, 59.6, 73.9, 83.0, 76.7. Copper production KT 0.81, 0.01, 0.92, 0.01, 0.84, 0.14.1. GE production cost 65.0, 77.0, 75.2, 71.6, 85.9, 107.8, 101.9. AISC INCLPSA reported US dollar per ounce $1,558 quadrillion 616 trillion 604 billion 562 million 540,561. Revenue US dollar M68.0 78.1 79.2 71.8 91.2 118.5 116.4. EBITDA US dollar M10.1 18.7 33.7 32.0 40.3 49.0 46.5. FC CF US dollar M minus 6.93.4 14.6 16.3 32.0 27.1 27.7 EV EBITDA by 7.73.1 1.7 1.7 2.7 2.2 2.3 per x 5.5 13.9 11.8 11.3 8.3 net debt US dollar M 52.4 49.0 34.6 18.1 to 10.5 minus 30.9 minus 51.7 source, company, SP Angel acts as nomad and broker to Anglo-Asian Mining Cora Gold, LON, Quora, 10p, MKT cap £5.5 million 1 to 2 miles exploration target identified at San Angkor OSRK Consulting released an initial exploration target of between 30 to 50 MT at an average grade of 1.0 to 1.3 grams, T for 1.0 to 2.0 Maz gold contained at the flagship San Angkor gold discovery in southern Mali. The mineralization has been delineated at a depth of 100 meters, most of which is hosted within soft weathered material. Oxidation zone ranges from around 50 meters to in excess of 100 meters in depth across the project area. Soft saprolitic rock lends itself to cheap surface mining and milling, offering a potential low-cost source of ore to the processing plant. The coming field season drilling program will now focus on higher-grade zones, testing their strike extent and depth potential within the mineralized structure. Full SRK exploration target report will be released in due course. Conclusion: the estimate provides a good starting point for the next phase of the drilling program, aiming to delineate higher-grade zones that would potentially kickstart a standalone gold operation. SP Angel acts as nomad and broker to Cora Gold Cradle Arc, LON, CRA, 1.3p, MKT cap £3.6 million, license extensions granted at Dakadu and Makala. Cradle Arc reports that its mining license covering approximately 28.5 square kilometers, including the Thakadu open pit and adjacent Makala underground deposit, has been extended by Botswana's Ministry of Mines, Green Technology and Energy Security until May 2020. The project area at Thakadu, which is located some 70 kilometers southeast of the company's Kimuwana mining operation, has an indicated resource of 2.3 MT at an average grade of 1.11% copper and 11 grams T silver, and an additional inferred resource of 5.4 MT at an average grade of 0.63% copper and 9 grams T silver. The Makala deposit, located approximately 700 meters northeast of Thakadu, has a reported inferred resource of 11.5 MT at an average grade of 1.46% copper and 34 grams T silver. The company comments that shallow, historical mining between the two deposits indicates the potential for future infill drilling to join the two deposits along strike to create a total strike length of over 3 kilometers. While noting that previous owners had transported ore from Thakadu to Moana for treatment, CEO Kevin Van Wouw outlined that, subject to obtaining the requisite finance in due course, Cradle Arc plans to start the additional drilling required in the future to enhance the confidence of the existing resource, a vital step towards completing a feasibility study for a potential underground mining operation using access from the base of the existing open pit. Historical scoping studies indicated that the resource was eminently mineable with financial returns strong enough to justify further development. Conclusion: securing license tenure at Thakadu and Makala provides Cradle Arc with relatively low-risk development opportunities. However, we imagine that the primary focus is currently on Moana. SP Angel acts as joint broker to Cradle Arc plc. Galileo Resources, LON, GLR, 1.1 pence, MKT cap £3.3 million. Drilling results from Stars Inc. Galileo Resources reports drilling results from the initial 4 holes of its recently completed 8 holes, 1,000 meters drilling program at its 80.75% owned Stars Inc. project in Zambia. Drilling results, mainly from the eastern part of the deposit, include a 23 meters wide intersection averaging 15.46% zinc from a depth of 14 meters and hole SZDD030, which included a higher grade section of 12 meters from a depth of 21 meters at an average grade of 26.21% zinc, a 12 meters wide intersection averaging 15.46% zinc from a depth of 10 meters and hole SZDD032, which also included a higher grade section of 7 meters from a depth of 12 meters at an average grade of 22.69% zinc. 5 meters wide intersection averaging 9.38% zinc from a depth of 11.5 in hole SZDD034, which included a higher grade section of 2 meters at an average grade of 23.1% zinc, and a 13 meters wide intersection averaging 6.37% zinc from a depth of 13 meters in hole SZDD036, which included a section of 3 meters from a depth of 18 meters at an average grade of 23.59% zinc. The company also notes that the higher zinc grades also appear to be associated with elevated levels of germanium. The company intends to develop, as soon as practicable, a work program with the objective of meeting the requirements for the application of a small-scale mining license for Star Zinc, the transfer to Galileo of the 15% interest, indirectly 14.25% in the Star Zinc project, in Enviros Mbia Limited. EZL, currently not held by Galileo, is progressing pursuant to the agreement announced on 13 September 2018. On transfer, Galileo will hold 95% and the government 5% of Star Zinc. Conclusion: the recent drilling at Star Zinc is intersecting high zinc grades in the eastern part of the deposits as Galileo moves ahead to acquire a 95% interest. We look forward to the remaining drilling results as they become available. Orosur Mining, Lon, OMI, 8 pence, MKT cap £11.7 million, Q1 results and Newmont investment in Anza Gold Project in Colombia. Orosur Mining reports a Q1 pre-tax loss of $6 million for the 3 months ending 31 August. Q1 2018 loss $0.4 million. The result reflects sharply reduced output of 3,029 ounces of gold, Q1 2018 8,626 ounces, following the decision, in August, to place the San Gregorio operation in Uruguay on care and maintenance following technical setbacks including lower than expected grades at the underground SGW part of the mine. Cash balances at 31 August amounted to $1.1 million, partially offset by long-term debt of $0.2 million. A creditors' meeting to help determine the future of the Uruguayan operations is to be held in December. Newmont Mining has, however, provided $2 million via a non-brokered private placement for a 19.9% interest in the company and agreed to earn a 75% interest, over 3 phases, in Orosur's Anza Gold Project in Colombia, by spending a minimum of $30 million in qualifying expenditures over 12 years. The investment milestones include the completion of a NI 43-101 compliant feasibility study, and making cash payments to Orosur equaling a total of $4 million over phases 1 and 2. Conclusion: Newmont's backing for the Anza project provides a new strategic direction following the operational difficulties in Uruguay. Premier African Minerals, LON, Prem, 0.12p, MKT cap £8.7 million, Zimbabwe to decide on restructuring of raw tungsten mine. Premier African Minerals, Prem, has applied to the Zimbabwean government to restructure its holding in raw given the need to put fresh equity into the project. The Ministry of Industry, Commerce and Enterprise Development has indicated that the process will be concluded before the end of this month. Premier African Minerals currently holds the maximum allowable stake of 49% in Zimbabwe, but recent proposals indicate the government will relax the rules for new projects. Prem has struggled to make its raw tungsten project work, first in the open pit and then from the underground. The CEO says Premier has established independently that it is feasible to bring raw back into production and that it will be possible to finance the start of production, but not until proper legal process is concluded and the ownership of raw reflects present Zimbabwean government policy. Premier's new technical plan is set out in the following RNS: https://polaris.brighter.com/public/premier_african_minerals/news/rns/story/w9djqpx. The model assumes an ambitious but not outrageous tungsten apt price of $300 per MTU versus a price of $275-290 MTU in Europe and $280-286 MTU in China last week. The closure of Wolfstrakeland's tungsten mine might well cause prices to rise further in the short term, making PREM's restructuring plan all the more attractive. PREM's underground measured resource grade was estimated a year ago at 29,000 T, grading 0.545% WO3, with the indicated resource at 76,000 T, grading 0.631%. The total underground mineral resource was 6,257 T of contained wolframite, though we suspect there will more to be mined. Today's new plan proposes a peak funding requirement to get the mine back on track of $1.657 million in month 4 with positive cash flow in month 5. We suspect a combination of past poor recovery rates, lowish underground grades and some geological uncertainty has led to the closure of the mine. We hope the new government of Zimbabwe will allow the restructuring to give this latest plan a chance of being financed and for a return to work at the mine. Bacanora Lithium, LON, BCN 33.0p, MKT cap £44 million, final audited accounts for year ended 30 June 2018. Bacanora Lithium provide audited final results for the 12 months ended 30 June 2018, which saw the company successful complete the redomicile of jurisdiction from Canada to the UK, which is solely quoted on AIM. The company also strengthened its board and senior management team to support the development of broad lithium projects, welcoming 2 new directors, Peter Secker, CEO, and Eileen Carr, NED, and a new CFO, Janet Boyce. The company are advancing both the flagship Sonora Lithium project in Mexico with ongoing feasibility study work at its Zinnwald Lithium project in Germany. The Sonora Lithium project demonstrated strong economics from a feasibility study for a 35,000 TPA lithium carbonate operation, $1.25 billion NPV based on lithium carbonate prices of $11,000 per T, 26.1% IRR, $3,910 per T. Lithium carbonate life of mine gross operating costs, which are comparable with those of the low-cost brine producers of South America post-period end, $150 million senior debt facility secured with RK Mine Finance, a leading provider of finance for resources companies, to finance the development of Sonora. Post-period end, $65 million and $25 million conditional equity commitments from the State General Reserve Fund of Oman, and Bacanora's offtake partner, Hanwha Limited, as part of the Sonora project financing package. Following final consideration settlement in August 2018, Bacanora have unrestricted access to develop and operate Sonora for the initial LOM secured following acquisition of La Ventana and La Joya parcels of land in Sonora for $2.9 million. Bacanora are also developing the feasibility study for the Zinnwald deposit in Germany, expected for completion in Q2 2019. The project hosts an E43-101 compliant upgraded measured and indicated resource of 124,974 tons of contained lithium for Zinnwald issued in September 2018. Exploration license awarded covering 295 hectares of the previously mined Falkenhayn lithium deposit 5 kilometers from Zinnwald in Germany, potential to increase the LOM of Zinnwald. CEO Peter Secker notes the Sonora project is one of the most advanced projects currently in the pipeline, but, if forecasts that demand for lithium could rise to more than 450,000 tons per annum by 2025 from today's 250,000 level prove to be correct, much more production will be needed. Talga Resources ASX TLG 45 cents MKT cap $96.8 million Swedish Cobalt Project update. Talga Resources announced the incorporation of 100% owned Swedish subsidiary, Talga Battery Metals AB, supporting the advance of cobalt copper gold projects located in northern Sweden. Kiskama project, all necessary permitting obtained to commence diamond drilling as part of completing the maiden JORC-compliant cobalt-copper-gold resource at Kiskama. Geophysical surveys IP and MLEM commenced to define further extensions to known mineralization and test high-grade drill targets. Project extended over prospective new targets including historic rock sample results up to 0.27% Co, 0.9% Cu and 0.12 grams TO. Latakowski project drill core sampling extends Wildcat mineralized intercept to 91.8 meters at 0.18% Cu and 147 ppm Co from 14 meters depth including 21 meters at 0.34% Cu and 182 ppm Co. Anomalous lead-zinc intercepted 2.5 kilometers north of the copper-cobalt mineralized zone, including 1.35 meters at 1.6% Zn and 0.94% Pb from 104 meters. Eastitic project Talga rock samples return up to 4.8% Cu, 1.2 grams, To, 66 grams, Tag, 0.6% Mb plus anomalous levels of tellurium and bismuth. Managing Director Mark Thompson adds, the potential of the projects is further enhanced by the close proximity to high-quality infrastructure and low-cost sustainable hydropower, as well as being situated in the same mining district as Europe's largest copper-gold mine. Conclusion: the co-development of Swedish cobalt projects complements downstream processing of the flagship Vittangi graphite to support the growing battery markets, particularly in Europe, who are targeting billions of euros funding to expand battery capacity. We look forward to understanding the scale of the projects as maiden JORC-compliant resources are announced. Disclaimer: this note has been issued by SP Angel Corporate Finance LLP, SP Angel, in order to promote its investment services. This information is a marketing communication for the purpose of the European Markets in Financial Instruments Directive, MIFID, and FCA's rules. It has not been prepared in accordance with the legal requirements designed to promote the independence or objectivity of investment research. This document is not based upon detailed analysis by SP Angel of any market, issuer or security named herein and does not constitute a formal research recommendation, either expressly or otherwise. The value of investments contained herein may go up or down. Where investment is made in currencies other than the base currency of the investment, movements in exchange rates will have an effect on the value, either favorable or unfavorable. Securities issued in emerging markets are typically subject to greater volatility and risk of loss. This note is confidential and is being supplied to you solely for your information and may not be reproduced, redistributed or passed on, directly or indirectly, to any other person or published in whole or in part, for any purpose. Neither the information nor the opinions expressed herein constitutes, or is to be construed as, an offer or invitation or other solicitation or recommendation to buy or sell investments. This information is for the sole use of eligible counterparties and professional customers only and is not intended for retail clients, as defined by the rules of the Financial Conduct Authority, FCA, and subject to SP Angel's terms of business as published or communicated to clients from time to time. It is not investment advice and does not take into account the investment objectives and policies, financial position or portfolio composition of any recipient. This document should not be relied upon as authoritative or taken in substitution for the exercise of your own commercial judgment. SP Angel is not responsible for any errors, omissions or for the results obtained from the use of the information in this document. This document has been prepared on the basis of economic data, trading patterns, actual market news and events, and is only valid on the date of publication. SP Angel does not make any guarantee, representation or warranty, either expressly or implied, as to the factual accuracy, completeness, or sufficiency of information contained herein. This document has been prepared by the author based upon information sources believed to be reliable and prepared in good faith. SP Angel, its partners, officers and/or employees may own or have positions in any investments mentioned herein or related thereto and may, from time to time add to, or dispose of, any such investments. SP Angel Corporate Finance LLP is a company registered in England and Wales with company number OC3170449 and whose registered office address is Prince Frederick House, 35-39 Maddox Street, London W1S2PP. SP Angel Corporate Finance LLP is authorized and regulated by the Financial Conduct Authority whose address is 25, the North Colonnade, Canary Wharf, London E145HS and is a member of the London Stock Exchange plc. www.spangle.co.uk. SP Angel combines the focus, flexibility and creativity of a boutique with the expertise of a global investment bank. Index current percent UK 106,995.76 to 0.15, 0.00, gold 1,234.30, 12.30, 1.01, oil, WTI 71.71, 0.37, 0.52, DJIA 25,222 minus 94, minus 0.37.